strategic growth, and value that lasts. I'm Joe Carter, founder of the Twin Flame Group and partner with the franchise consulting company. And today's guest has built something that most people thought was impossible. Peter Harris is the founding partner of University Growth Fund, the largest student run VC fund in the country. He has helped over 400 students make real investments in real companies. We're talking Spotify, Airbnb, and even OpenAI. But before we dive into that, quick shout out for our sponsor. This episode is brought to you by Dallas Fort Worth Pierce Bespoke, the go-to clothier for founders and executives who want to look as sharp as they think. You've already built a business, now go build the look. They will craft custom pieces for founders who know that presence is a part of performance. But let's dive into it. Peter, welcome to the show.
Thanks for having me, Joe.
Yeah, let's jump right in. I'd love to start with scale. Like, you have built quite literally the largest student-run VC fund in the country. What was like that aha moment that led you to believe that students could actually lead real deals?
Yeah, I mean, it's a great question. So I wish I could take all the credit for it, but when I started my career, there was another fund called University Venture Fund, which was a predecessor to this fund that I run today. And I joined that as a student. And so gained, real world experience and saw firsthand that, students could do remarkable things. And my belief is that if you create an environment where students can thrive and you give them the support, you give them the training, smart people at any age can do remarkable things. And so, we basically have built University Growth Fund on that belief that the right training, the right structure, the right support, the right autonomy, the right opportunities, and people generally rise to the occasion, especially for things that they're passionate about.
I love that. So many founders out there underestimate what smart, potentially even quite quote unquote unproven talent can do when you just give them ownership. In coaching groups, we call that ownership before credentials. So I love that, and I couldn't echo the sentiment anymore. I know y'all have co-invested with companies like Airbnb, Spotify, OpenAI, many others as well. How did you get access to deals that were typically reserved for like tier one level funds?
Yeah, so there's a bunch of different ways. I mean, when we think about deal sourcing, about half of our deal flow comes from other funds that we work closely with, and the other 50% comes from our own relationships. It's interesting. University Growth Fund is in some ways like an impact fund from the perspective of it's not so much that we're making investments that have impact, although that is something that actually does matter to us quite a bit. But it's more that we strive to provide a very rich experience for students. And because we put so much time and energy into it, we can speak really authentically about the impact we're having on those students. We track all of that data. So our students are making about 120% more than their peers at graduation. They're landing incredible jobs, largely because of the experience that they're getting at our firm. So when we meet with other investors and we meet with entrepreneurs, I think a lot of business people, whether they're founders or investors, are genuinely good people. They want to support good things. And so they look at this and they say, this is amazing what you're doing. I wish this had been around when I was in school. I would love to support this. And you're telling me that I can support it by taking an investment check. Let's do this, right? And so, I think it's one of those instances where we've been able to demonstrate that you can do good by doing good, and everybody can win. The students win, the founders win because they get capital, they get to, give back. And then the fund also wins because we get access to great deals, which is important because we can then drive great returns back to our investors so that they want to re-up in the next fund. And the whole thing becomes sustainable. So I don't have to go out and beg for grant dollars every day to keep our model running. I can have a tremendous impact on students in a way that's super sustainable.
I love that. I absolutely love that. Textbook strategic leverage. You're not trying to outbid people. You're out positioning them. When there's alignment with capital, there's alignment far beyond big checks. So that's fantastic. How about let's talk due diligence. Most
Yeah.
interns are stuck in spreadsheets, but your students write like 80-page memos and pitch real committees. Why do you structure it in that way?
So, we're not generally speaking experts at anything because the students don't have a lot of experience, right? So what that means is we just have to go deeper. So we approach every deal from a place of first principles, and we believe that we come from a place of humility almost by definition with our students. And so it's like, hey, I'm coming at this and I want to learn and I need to go deep. And so we write 80-page memos because it's a way to kind of demonstrate that we're going deep into these various different areas where we're evaluating. I mean, most venture funds, if they write a memo, it's only a handful of pages, but they can get away with that because they've got decades of experience behind them. So that's really important for us. The other thing is that there is value in writing your thoughts down and getting clarity around that, and also being concise. So 80 pages sounds like a lot, but if you think about like how complex a lot of businesses are, especially in the startup world, it still requires quite a bit of insight into being concise in how you're approaching it. And so, that's another piece that's important for our students to get that experience. And it's interesting, they always whine and complain about like, can we just do a deck because a deck is so much easier and there's not as much writing. And we're like, no, you need to do the deck and the memo, because even if you don't write ever again, there's some clarity of thought that occurs going through that process that will yield benefits throughout your career. And then of course they come back years later and they're like, I'm so glad you forced us to write things down.
Hindsight 2020, right? But that's what I call systems that train while they scale. That's fantastic. That's how you build operator capacity while keeping the standards high. That's beautiful. Thank you for eloquently explaining that to us. You've basically flipped the script. Most firms train analysts after they hire, but you give real capital responsibility before graduation. So, what's the impact on the student outcome?
Yeah, so as I mentioned earlier, the students are landing incredible jobs, and both from a pay perspective, but more importantly from that first job helps you get the next job and the next job, and sets you on kind of the trajectory of your career in many cases. And so even more important than that, the amount of money you make in that first job is like the quality and caliber of the job you're landing, because then that opens up more doors, right? If your first job is in investment banking, it's really easy to go from investment banking to private equity or venture capital, much easier than to come from like another field, for example. And so but getting those jobs is hard and competitive, especially if you don't go to an Ivy League school, frankly. And so our experience helps those students land those jobs, in large part because when they're sitting down with an interviewer, let's say they're going to apply to an investment bank, that interviewer in many cases is somewhat jealous, I think, of the type of experience that our students are getting, because they're like, oh yeah, I worked on Spotify, and I can walk you through, I can break down the entire investment thesis, I can go in at a very deep level on how we made that investment decision, and what the pros and the cons and the risks and the upside and all of that were. And those are the types of deals where investment bankers, in many cases, they're doing investment banking, so eventually they can get from the sell side to the buy side and get that type of experience and make those types of investments. And so, I think it's really great for our students because they graduate and they're like, yeah, here's a portfolio of deals that I have worked on, done, I can speak to it. And what that demonstrates is I can hit the ground running day one. You don't have to train me. You might have some training around your own specific processes and culture, but like I already know the lingo, I already know how things are structured and work in this world. I've been taught how to think critically and to figure things out and operate with a certain degree of self-sufficiency. And like I think those are all the things that really matter to smart employers.
I couldn't agree more, and I love that career arc that you referenced. Like you land that first really good job, and you're absolutely correct. Your career arc is completely different. That trajectory adjusts, and I know you mentioned there's maybe some jealousy. Well, I happen to think jealousy is a form of flattery. So let's get everybody out there who's the interviewer to be jealous of your candidates. That's amazing. You said that your job is to quote unquote get them coffee, literally. What's the biggest misconception that people have about how your firm operates?
Yeah, so one of them is, sometimes people will be a little jaded and they're like, well, that's great. You've got, 50 interns to do all the hard work that you don't want to do. Or they'll say, like, oh, it must be so nice. You have all these interns to do all this work so that you can just sit back and do nothing. Um, and I always like kind of laugh to myself inside because, like, I'll tell you, it would just be so much easier if I just had a couple people that I paid, a bunch of money and they were my analysts and I did make them do all the work I don't want to do and I just did the rest of the work myself. Because there is a lot of training, there is a lot of hand holding, there is a lot of recruiting. We have 50 students. We have about a 6 to 8%, depending on the year and the semester acceptance rate. So for every student that's in our program, there's 12 that we didn't take, but of those 12, we probably at some point put them through. There was some level of engagement on our side through the recruiting process, and we do that 3 times a year. And so, it's a tremendous amount of work. And so, like, I think that's one of the big misconceptions is that, we just have a bunch of grunt work labor. And I don't feel like that's actually the case. The flip side, though, too, is, as I mentioned earlier, like, it's very important to us that we are letting the students do meaningful work. And even if that means that I have to do less meaningful work to ensure that they can do more meaningful work, if that makes sense. So, for example, the joke is always like, you have interns to get your coffee for you. That's not meaningful work. And so we kind of flip that, where in some cases I am literally driving to Costco to buy coffee for our break room so that our students have snacks and coffee and well, mostly they drink energy drinks now, but you get the point. And so that they can focus their time and energy on doing the stuff that is meaningful. So meeting with management teams, asking them hard questions, digging through data rooms, building financial models, making investment decisions, either as a team where they're like debating on whether or not this is a deal that they want to bring to the broader audience of students for a vote, or being part of that broader audience and actually making a vote, or once we've made an investment, rolling up their sleeves and helping our portfolio companies with different projects. And so, like, because we allow our students to kind of get this real world hands-on experience and not get bogged down in the typical intern work, that then of course yields the outcomes that I just talked about, where they can hit the ground running because they've been doing the job for a year or two already.
That's magical. You've created a system that helps scale people and capital at the same time. That's fantastic. You built this in Utah, right? So not exactly the heart of like Sand Hill Road. So
Yeah.
how does being outside the quote unquote VC bubble shape your strategy?
It's a good question. So, University Venture Fund, which was the predecessor to our fund, was really established in the early 2000s because Utah was viewed as a flyover state. I don't feel like that's necessarily the case anymore. Utah's kind of been discovered at this point, although it's still not, Silicon Valley by any stretch of the imagination. But back then, the challenge is that students here lacked access to the same opportunities that students on the coast had. And so a lot of kind of the culture and the foundation that carries on to this day is this mindset of like, we want to help underserved students get access to incredible opportunities by providing world-class experiential learning. And so that kind of like flows through every part of what we do. I think if we were in Silicon Valley and there were tons of other opportunities, we would have to structure our business very differently. And, we've expanded to different cities. So we now have offices in San Diego and Atlanta. largely because we want to provide opportunities to those markets. And it turns out that although both are, have vibrant ecosystems, they're not Silicon Valley. There is a certain level of, underserved populations there. In particular, we opened up our office in Atlanta because less than 3%, excuse me, of venture capitalists are Black or brown. And we thought, look, we're not necessarily going to have quotas or anything like that, but our whole program is designed to serve those that are underserved. Why don't we just open an office there? And because 50% of the population is Black or brown, and we'll just give opportunities to whoever wants to apply, and hopefully we can help shift the demographics and composition of venture capital in a very natural way. So that has always been like one of our core tenets, and I think is largely informed by the fact that we're not in Silicon Valley.
That's fantastic, and the mindset is astronomical. Like, you don't need coastal validation if your numbers and your model hold up, which obviously they do, and you're expanding into areas that is going to allow you to continue to further that. So fantastic. Let's talk some numbers or metrics if we could. What's the
Sure.
average uplift in salary for an alumni member of yours?
Yeah, so our students are making about 120% more than their peers at graduation. So that represents roughly a starting salary after graduation of about 115,000. And if you look at most undergrads from the universities where we draw students from, their starting salaries are in the like $50,000 to $60,000 range. I think more importantly than like the salary number, though, is, as I mentioned earlier, the quality of jobs. So they're landing very competitive jobs, whether it is investment banking or management consulting. Some are going to start their own companies and raise money from tier one venture capital funds. Some are going to work at tech startups and have been really successful there. And then, of course, we always have some that do go straight into investment management. So they could go into venture capital, real estate, private equity, hedge funds, private credit, et cetera. So it's a broad range. And what we tell students is like, look, come in, work at University Growth Fund, do a good job, and you can leverage your experience here to pretty much go anywhere you want in the business world.
That's amazing. I know you mentioned it earlier, but I'd love if we could just repeat it, if you don't mind. What your acceptance rate, number of applicants to number of people that you take in?
Yeah, so every semester we do recruiting. So it's 3 times a year, fall, spring, and summer. I would say in general we get several hundred applications. So call it 200 to 300 applications, and that's usually for call it 10 to 15 slots within the program. So it's kind of in that like 6 to 8% range acceptance wise. Most of our students are freshmen and sophomores. We do require that students be in one of the regions where we have an office, because although we have a very hybrid environment, right? Students are working on stuff in their dorm rooms, libraries, class, whatever. And we've always been that way. We do also believe that there's real value in face-to-face interactions. And so we require that the students that apply and get into our program come from one of the universities in Atlanta or San Diego or Utah. And we also require that the students can spend at least 2 semesters with us because, frankly, it just takes time to get up that learning curve and really get much out of the program. I mean, I think realistically, you need to be in our program for at least a year, working, on deals actively before you really kind of have a feel for what you're doing and what's going on. So that's what we look for, and that those different factors weed out quite a bit already. But then a lot of it is based on what do their grades look like? What do their experiences look like? Can they demonstrate intellectual horsepower? Can they demonstrate passion for what we do? Could be tech, could be entrepreneurship, could be investing. And then frankly, like, do they work well in a team? Are they the kind of people you would want on your team? We don't, we're very protective of our culture. We've had people that incredibly intelligent, extremely passionate, but kind of jerks, and we don't let them in the program. So that's also another part that's really important to us.
That's fantastic. I mean, the acceptance rates proves that you got some diligence efforts, that you are high level of selection when you bring someone in, and when you bring them in, you're looking for commitment, and you're going to fulfill your end if they fulfill theirs. So I love it.
Yep, exactly.
How do you balance investing returns with the educational mission?
Yeah, so a lot of people sometimes ask, like, what's more important to you? Is it returns or is it student impact? And I firmly believe that the two actually go hand in hand. They feed off of each other. So if I spend a lot of time providing a really great training program and mentorship program and lots of support structure for our students and help them make, like, they will have the resources they need to make good investment decisions. And conversely, if I'm doing my job sourcing really, really compelling investment opportunities, then the students will get to work on, amazing deals like Spotify and Airbnb and OpenAI, and that will then provide a really rich experience and education as well. And so the two really do go hand in hand, right? If I'm working on Spotify, I get to, as a student, I get to see how like an amazing business is run by exceptional founders. And that's just, priceless education. If I'm also then, pitching that deal to our investment committee of other VCs and getting to interact with them, they're asking hard questions and really pushing the diligence to make sure it's good. That also is an incredible learning opportunity. So I don't believe that one really suffers from, versus the other. I think the two really go hand in hand.
I mean, obviously you know way better than I do, but I couldn't echo that sentiment any better than that. Um, Now let's talk LPs. How do your investors comfortably back students? Who says yes and kind of who's a hard no?
Yeah. So clearly our fund is not for everybody. We've met with different funds and capital allocators that are like, I'm not going to lose my day job backing a bunch of students. And, that's understandable for sure. But, I think what a lot of our investors really appreciate is that they are able to make an investment in a company that's having real tangible impact on the lives of these students, and simultaneously is able to leverage that to create a competitive advantage that allows us access to really compelling, highly competitive sought after deals, and get access to those and hopefully generate great returns for our investors over the fund life. And so, our LP base for the most part today looks like a number of family offices and high net worth individuals that are passionate and believe in what we're building and doing, and then are, in some cases pleasantly surprised by the returns that we're able to generate and the deals we're able to get access to. And then we also have a number of incredible institutional investors that back us as well, such as Ally Bank, American Express, Sallie Mae, Synchrony, Square, and others. And for them, they back us in part because of the student program for sure, and also because we help them with requirements they have regarding impacting the communities where they do business as well.
I love that. There's a circle of influence that's occurring there. Every capital that you're raising kind of has really two pitches: the math, but then the execution of the mission. I love that. You turned basically student run into value add, in my opinion. That's how I would phrase it. Maybe I'm off slightly. Correct me if I'm wrong there. But could you give us a win where students made a real impact on a portfolio company?
Yeah. So we have a company right now in our portfolio, and part of their strategy is to roll up other businesses. They think and we agree, that there's an interesting opportunity to buy businesses that raised a lot of money during 2021 at very high valuations, we're unfortunately not able to grow into those valuations, but we're able to build like interesting product. And so what this company does is within its area, it goes and identifies these companies, acquires them, and gives kind of the teams at those companies a second shot at building something big, and then rolling all of those businesses together. And so one of the things that we've done is for that company is we spend a bunch of time helping them identify different targets that they could go out and acquire, and pulling due diligence and other materials together for them as they're evaluating those types of investment opportunities. And because we can throw, 5 to 10 to 20 students, all of which are really bright, hardworking, and motivated, we can crank through very large projects like that very quickly for them. We've done a bunch of other things. In the past, we had one company that their CFO left in the middle of a fundraise, and we rebuilt their entire financial model and helped them end up closing $15 million in additional funding. We've reached out to hundreds of influencers for some of our consumer products companies to help them. We've done, projects where companies have brought us like big data sets and just said, hey, this is all of our customer data. Can you help us, analyze this and identify ways to better find and serve our customers? And so we've done those types of projects. So it's a really broad range of different things.
Well, that's what scalable talent looks like right there. Early stage teams more often than not are undersourced, and you provide the ability to give them the resources necessary to do all that stuff, potentially at a faster rate than they could do on their own, because you can throw so many high caliber students at the project. So that's fantastic. You, in my opinion, have passed impact only investing like a long time ago, and doubled down on tech. So why did that clarity matter?
Yeah, so I think, I don't know, I've spent a lot of time in working as an international consultant in Africa, South America, and the Caribbean, designing and launching businesses in those markets. And one of the things that like really stood out to me doing a lot of that work was that the businesses that had the most impact were not the ones that everybody called impact investments. Uh, for the most part, the companies that have the most impact on the lives and well-being of the people in those markets tend to be like, businesses you don't think of necessarily as impact businesses. There was, it's like a transportation business, a company that's like made up of a bunch of trucks and they move goods from point A to point B. And that's important because like it increases trade and, so on and so forth. And so, when we're looking at our investments, I don't necessarily say that like they're non-impact. I think they have tremendous amount of impact, and arguably like more impact than a traditional, impact investment, quote unquote. Um, and then, we tend to be like very picky too. So in terms of, businesses, like we have passed on incredible businesses that, they fall into areas and categories that we just don't feel morally comfortable with, whether it's gambling or any sort of like adult entertainment or drugs or alcohol, things like that. And so yeah, even though like we're not necessarily saying like we want to invest in clean water in Africa businesses, I look at some of our companies that have done incredible things for their communities and the number of jobs they've created and so on and so forth, and feel very proud about the impact that those companies are having.
You're making global impact one portfolio or partner company at a time. It's amazing. Final one, zoom out a little bit for us. Where is early stage capital heading next, in your opinion? What does Gen Z see that the industry doesn't see?
So I think that there is a tremendous opportunity in the world of AI today, wherein I think it will become more and more important that every individual, whether you are an employee or not, becomes more entrepreneurial. And I think one of the things that's really powerful with Gen Z is that Gen Z, they grew up with going through the financial crisis and they were young kids. They saw, parents losing their house and all kinds of stuff. Um, and I think that like solidified in them a desire to start businesses, right? It's just been in the last like 5 to 10 years or so that like this whole concept of a side hustle really came to fruition, which is, you know, emblematic of all of these Gen Z individuals going out and saying, "Hey, I need to be entrepreneurial. I need to start a business." You see so much of the like most popular content on social media and YouTube is very business related, very entrepreneurial related, and so I actually think it's like this incredible time where you have a population that is very entrepreneurial being matched with a technology that enables individuals to build businesses that used to take a lot of money and a lot of people to get off the ground, right? I was telling my students the other day, it was interesting. So over the weekend, a few weeks ago, I was really frustrated because I bought a bunch of fitness equipment and I was trying to find a fitness app that would help me create a program to leverage my fitness equipment. And I just couldn't find anything that really worked with what I wanted. So I just went on and over the course of a weekend built a custom app to build out custom workout programs and tracking just for the equipment that I have and the way I wanted to work out. And so then I came back and I told my students about this experience. I was like, yeah, I was really frustrated. I didn't like it. So I went and just built my own app and it's great and I love it. And I showed it to them all and everything. And that then I didn't know about this until this last week when I've been catching up with a bunch of my student interns. I've had multiple now come back and say, like, you inspired me. I went and I built my own app, or I started learning Python. I started building apps and doing stuff. And one of them, he's Muslim. He built an app that basically helps Muslims do their prayers without distractions. So when it's prayer time, because they have to pray so many times a day, it sends them a reminder and then it blocks everything on their phone during that prayer time so that they can do their prayers without distraction. And so he built that because it was his own pain point, and it's now generating thousands of dollars every month in revenue for him. And so like I think that is like such a like cool case study where it's like now anybody can come up with these ideas, and over the course of like a few weeks they can build these apps and get them out there, software. And I think it's we're not too far out from extending to physical products as well. And so when I think about early stage venture, kind of bringing this all back to your original question, I think that there are going to be a tremendous number of opportunities for investors to start backing and supporting these types of smaller businesses. And I'm really excited for it.
I couldn't agree more. I see the same trajectory in terms of entrepreneurship, and that is likely, no, I'm not going to say likely, that was the best case study example I've ever heard of. So that was fantastic. So whoever that student is, shout out to them. That was incredible. Peter, this has quite literally been a masterclass. Thank you so much for sharing the blueprint behind University Growth Fund. I sincerely appreciate you taking the time. I know you're a busy guy, and you got a lot of students that you lean in and support. So thank you for taking the time for myself and my audience. I appreciate you.
Yeah, thanks for having me, Joe. This is a really fun conversation. And, obviously I make the Kool-Aid, but, I love sharing it with as many people as I can. So thank you for having me.
Of course. And if anybody wanted more information and wanted to become a part of the University Growth Fund, where could they reach out to you or your team?
Yeah, thank you. So people can go to our website, ugirlsfund.com. There's lots of information there. You can check that out. There are application links if you are a student, full-time student located in Atlanta, Salt Lake City, or San Diego. And then if you're interested, I also have a YouTube channel where I talk about a lot of the things that I teach students and, make it more broadly available. That's VC Pete. And then I also have a podcast where we talk about all things venture capital as well at vc.fm.
I love that. And if you didn't catch any of that, just scroll down. We'll throw those links in the comments so you could very quickly see these different podcasts, links, applications, etc. for both Pete and the UGF team. To our listeners out there, if you're building systems, scaling people, or thinking about valuation the way the buyers do, subscribe, review, and share this with someone out there who's building the next generation. And if you're interested in turning your own growth into transferable value, head to our website, twinflametx.com, and download our free strategic growth blueprint. Until next time, let's lead, manage, and thrive one day, one team at a time. Thank you, everyone. Have a fantastic rest of your day. Appreciate you all.